Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Volatility certainly returned to the US market with a vengeance. A big sell-off at the start of the week here, really highlighted by Apple and Goldman Sachs that sort of started the trend. Apple, there was a story out that one of its suppliers had announced that one of its customers, it didn't name Apple, had cancelled some of its orders. That was then deemed to obviously be Apple. Pressure came onto the share price, and that saw pretty major fall. And the other big story was Goldman's. That was in relation to the one MDB financial scandal, and that story is sort of ongoing. But still quite interesting to note, even with this increased volatility, the Dow and the S&P are up still just over 2% for the year. And on a 12-month basis, the Dow is up around 8%, and the S&P is up just under 6%. So, as discussed here many times, certainly the increased volatility out there, potentially that's a sort of an offshoot and a consequence of this increased passive investing with EFTs. But if you look at the fundamentals, the US economy is still strong. You've got very good growth. You've got very low unemployment. You've got a little bit of wage inflation starting to creep through, and that's starting to push the inflation targets up, which the central banks have been trying to get sort of going for the last 3 or 4 years. You've still got pretty good, strong corporate earnings as well. And obviously with the backup of the share price, that makes some of these price earnings ratios now reasonably attractive. And certainly valuations are getting to levels that they do look pretty attractive going forward. So it will just be very interesting to see how it trades going into year end. Certainly at the moment, most analysts and economists are still expecting the Fed to increase interest rates in December. Fresh controversy coming out of President Trump. He had a little bit of a fractious meeting in Europe, sort of attending the celebrations for Armistice Day. Certainly a little bit of a veiled sort of attack against France. And now he's returned to the US. He is now sort of taken to Twitter, his favourite sort of social media device, and really ridiculed the French army and sort of losses in World War I and World War II. Again, not particularly presidential. But he hasn't spared it to the international scene. He's also weighed in on the California wildfires, which really are sort of sweeping mass devastation across that region. And, he's put that down to poor forest management. Again, sort of taking no regard for the loss of life, and also for the firefighters who are out there actually trying to control these fires. Obviously, the big worry is still the trade tariffs, and as we creep closer to that sort of January deadline, with potentially with tariffs going up to 25%, still little has come out of any sort of potential negotiations, and it's just going to be interesting to see if some sort of deal does get done before year end. Also talk as well as potentially, sort of fresh movement within the administration. Jeff Sessions resigned last week. Really again at the president's request, as he said in his resignation letter. Talk this morning that Kelly might be looking to leave his post as well after clashing with the First Lady. Oil certainly seeing some huge selling pressure coming through now, and it's really taken WTI, back through 65, back through 60, and really heading back towards that sort of mid 55 level. Certainly supply is a pretty major issue out there. Saudi and Russia are talking about potentially cutting production by about 1 million barrels a day, and then in the December meeting it'll just be interesting to see what OPEC come up with. Now, obviously, lower oil price is pretty sort of deflationary out there for the world economy. Good for the consumer because obviously paying less price for gas out there, but obviously pretty deflationary. Big story this morning is potentially a draft agreement on Brexit that has sort of been struck between the UK and EU, and it's now just a question of getting that ratified by the various sort of parliaments and cabinets, etc., and sort of getting it through that so we can see Brexit put into place by March 2019. Now, I would stress this is only a draft proposal. Still a lot of work to be done, but it is a little bit encouraging out there that potentially a deal is on the table. Here in New Zealand, the government's still facing some pretty major issues in terms of wage negotiations. In terms of fixed interest, BNZ have an offer in the marketplace, 5 years. Rate is going to be around sort of 365 and change, a little bit above or below around that sort of level. If you're interested in that, call us on 0800 867 323. Also, Christchurch City as well, bond offer out there. 6 years, rate hasn't been set yet. But again, if you're interested in that, call us on 0800 867 323. Now, as always, if you are looking for alternatives out there for income, there are plenty of alternatives available, plenty of options out there. And call us on 0800 867 323. Or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.